Hey everyone, welcome back to the channel. Today, we're diving deep into the latest U.S. jobs report and what it really means for you, your wallet, and the future of the economy. After years of plentiful opportunities, strong pay bumps, and pandemic savings fueling spending sprees, the tide is starting to turn. The latest numbers are sending a warning signal. It's getting harder to find work, and some industries are shedding jobs fast. So buckle up, let's break down the data. What's driving these changes, and whether we're staring down a slowdown or just a temporary bump in the road. The big picture? On Friday, September 5th, 2025, the Labor Department released its August jobs report. The headline number? The U.S. economy added just 22,000 jobs last month. That's a big drop from earlier in the year, and it pushed the unemployment rate up to 4.3%, the highest we've seen in almost 4 years. Economists call this a stalling labor market. Daniel Zhao, an economist with Glassdoor, put it bluntly, the job market is slowing to a dangerous speed. Think of it this way. If the economy is an engine, job growth is the fuel. And right now, we're running close to empty. Job growth is stalling. Let's put the slowdown into context. Over the past 3 months, the U.S. has averaged just 29,000 new jobs per month. That might sound like progress, but compared to history, it's worryingly weak. Excluding the crash at the start of the pandemic, this is the slowest pace since 2010, when America was still clawing its way out of the Great Recession. To make matters worse, June's job numbers were revised down, showing not a gain, but an actual loss of 13,000 jobs. That's a red flag, because revisions are based on more complete business reports. And here's another telling detail. The so-called diffusion index. It measures how many industries are adding jobs versus losing them. Anything above 50 means more sectors are growing than shrinking. For months now, it's been below 50. In August, it came in at 49.6, basically flat. That means losses are spreading across industries, not just concentrated in one place. Who's hiring and who's not? So where are the jobs? Healthcare is almost carrying the entire labor market on its back. In August alone, the sector added nearly 47,000 jobs. With an aging population, healthcare has been a steady source of growth. But here's the catch. Healthcare makes up just 15% of the workforce. For the other 85% of workers, opportunities are much slimmer. On the flip side, goods-producing industries, like manufacturing and construction, are struggling. Instead of benefiting from tariffs and restrictive trade policies, they're actually losing momentum. Manufacturing in particular has slipped into reverse as supply chain uncertainty deepens. Early warning signs. One of the clearest warning signs comes from the unemployment rate among black workers. In August, it rose again to 7.5%, the highest since late 2021. Just 2 months earlier, it was at 6%. That's a sharp increase in a short amount of time. Economists often call this the canary in the coal mine. Historically, when the job market weakens, unemployment among black workers tends to rise faster, and often that foreshadows broader job losses across the economy. Meanwhile, unemployment for white workers actually fell slightly to 3.7%. This split highlights how vulnerable certain groups are, especially those in frontline, lower wage, or government jobs, when policy shifts, tariffs, or hiring slowdowns take hold. What's driving the slowdown? So why is all this happening? There isn't one single cause, but uncertainty plays a big role. Businesses don't like unpredictability, and right now, there's a lot of it. Tariffs and trade policy are front and center. Industries like manufacturing and construction are tariff sensitive, and uncertainty about costs and supply chains makes it harder for companies to commit to hiring. Add in high interest rates, and it's a recipe for hesitation. Zhao explains it like this. It's not just that tariffs are being implemented. It's the unpredictability that makes long-term hiring plans risky. Companies don't want to commit to new workers if they're not sure what the business landscape will look like in 6 months. Why rising unemployment matters. At 4.3%, unemployment is still technically in the healthy range. But here's the problem. Once unemployment starts climbing, it can accelerate quickly. If more people lose jobs, household spending falls. When spending falls, businesses pull back even further on hiring. That feedback loop can turn a slow job market into a full-blown downturn. Right now, we're not in a recession, but the jobs report is flashing yellow lights. The road ahead? So, are we heading into a recession? Not necessarily. Economists like Joe Bruswales at RSM say that while growth is slowing, they don't expect the economy to slip into recession in the near term. Instead, they predict that hiring could reaccelerate once policies shift. How? Through a mix of interest rate cuts, tax breaks, and business investment incentives. If borrowing costs drop, companies may start investing and hiring again. Ron Hetrick, a senior labor economist, notes that sentiment actually improved late last year until tariffs reintroduced the risk of inflation. If the Federal Reserve signals confidence with a rate cut, that could reignite momentum. Conclusion. So here's the bottom line. The U.S. job market isn't crashing, but it is cooling rapidly. For now, healthcare is a bright spot, while manufacturing and other goods sectors are struggling. Rising unemployment among black workers is an early warning sign that the slowdown could deepen. Whether things improve or worsen will depend heavily on policy decisions, trade uncertainty, and whether the Fed decides to cut rates. So what does this mean for you? Keep an eye on your industry, update your skills, and prepare for a job market that's no longer as easy to navigate as it was just a year or two ago. Thanks for watching. If you found this breakdown helpful, don't forget to hit like, subscribe, and share your thoughts in the comments. What do you think? Are we heading into a recession, or will the Fed and policymakers steer us clear?